Welcome to the Tech Egg. Don't get scrambled. Enjoy the video.
You'll start by confirming essentials: available margin, lot size, and the specific Banknifty expiry you'll use. Once done, scan a 30-45-minute chart to confirm the prevailing trend. You enter with trend confirmation to reduce noise. Place a limit or market order with predefined stop loss and target. This locks risk. Make sure position size equals your 1 to 2% risk rule. Finally, jot the trade rationale so you can review it later and learn from outcomes. You now execute and actively manage the position. First, confirm entry signals with EMA 20, slope, RSI momentum, and a volume uptick. This is why entries won't be guesswork. Once entry triggers, scale in, take about half your intended size immediately and add as momentum confirms, which reduces entry timing risk. After the trade moves by half your expected reward, move the stop to break-even to protect capital. Then trail the stop with EMA or a fixed. You finish by executing your planned exit or reacting to a clear reversal. Stick to your stop loss if price invalidates the setup. After exiting, record the trade details, setup, entry, exit, and what went right or wrong so you can iterate. If trades fail repeatedly, one key troubleshooting tip: check timeframe alignment and reduce position size, especially around major news events, because volatility spikes can break setups. Make adjustments and only re-enter once your edge and risk controls are intact.
Thanks for watching. Consider subscribing if I helped unscramble your problems.